All right, we'll go through price, right? Now, there's not a lot to study from this week other than the idea that this CPI release, right, kind of put a dent on the rest of price delivery throughout the week. And this is just kind of where we have to mature as traders and understand, what does our optimal trading conditions look like, and what permits for those trading conditions to not be so optimal, rather. Okay. So it's just Friday, Thursday, Wednesday, Tuesday, and Monday. Okay, cool. So right away, of course, we've been calling these long-term targets out on gold, right? Equal lows. So here, so we've been calling those targets out on gold. If we do a weekly study, right? After this retrace, which we were, at this 1780 area on shorts, which we could have honestly rolled all the way down. What we saw is, once price reached, this point of this premium area in terms of this dealing range here. Once price reaches a premium, then we begin to reprice lower. And then now you see price move back into a series of taking out previous week's lows, right? So it's kind of that building that directional bias, previous week low swept. And then this is the retrace where they're continuously attacking previous week's high until they reach a premium array. And then you can see how you can reclaim. Well, actually not in this case, but we've been cutting through these 4-hour FEGs. And then understanding that when that area is traded through, right, price should come back and treat it as support and resistance. But this one doesn't necessarily align as perfectly as we've seen before, right? But anyways, moving from that, right, price moves back into a series of sweeping out previous week's lows, right, and then we get to last week, and we see that price trades within the range of its previous week. So this week here traded within the range of this one, right? And typically when we see that, and there is a obvious trending market, what you come into that week anticipating is that both sides of the board will be cleared, right? Especially if price opens for the new week, if it opens near that previous week's high, right? In this case, we open here. So this is a true textbook example of opening price here, accumulation, manipulation, and then now distribution at these old weekly lows, and we're also inside of this fair value gap. So that's where the repricing, the buy side reprice happened today. All right, so pushing down into the lower time frame. Okay, on Monday, I believe. Let's go to 15 minute. Yeah. So on Monday, we push above these previous week's highs here, okay? And this is already kind of pointed out in a earlier video that I created this week, but typically we view these guys, this series of down closed candles is our order block, and here's another one, right? So this is what we would term a propulsion block. Propulsion block is simply just an order block that trades, right back, immediately back inside of another order block. So it was vital for us to see price trade through this area first before we could anticipate that shorts were ready to be placed back inside of the market, right? So once we get this break, okay, this happens Monday, and then this is nothing but just an optimal trade entry, right? We're in that market reversal profile, and here's your OTE entry, right? So we're pushing right to about 70%, and on the hourly chart is where you can actually see where the optimal entries come from. So here's that weekly level, right? And like I've spoken about before, you can use old weekly or old daily or old monthly levels, because you'll see price will, once that order flow has shifted, price will, at any point in a retrace, price will use those levels as your support and resistance, given that there are PD arrays that align with that level. So in this case, right? We have that series of up close candles. Okay, we kind of have this breaker type of formation. But anyways, once price trades through here, and then ultimately where we saw those propulsion blocks, right, which is kind of down here somewhere. Once that happens, then right, we know that we're ready to get that repricing. And then here's that short-term high, intermediate term high, and then we anticipate, this failure swing right here. Okay. Let me look at a weekly really fast. Daily. All right. Just checking one thing. All right. Moving back to the 1 hour chart. Okay. So here is our fair value gap. All right. Remember, once price sweeps that high, and then we have a series of up close candles. Within this series of up close candles, we find a fair value gap inside. So this becomes that true ICT order block, right, in a downtrending market. Okay. So literally everything about this trade makes sense. And then also, if you look here, if we come to a 4 hour, okay, this is, we could consider this a true ICT order block also. So basically, price is just operating inside of a higher time frame OB, and it has a fair value gap within its range, right? So that is solidified as a true ICT OB. And then price trades back into this FVG. This move happens right at 7 a.m. New York open time. Okay, and then CPI release, of course. We see a heavy shift away in price, and then from there, right, the market is just kind of, to me, in limp mode. There's really no, there's no obvious areas or narratives to trade from per se, and that's what I prefer that we continue to do, is trade when it's obvious, not when it's it's iffy, and you're just even if you get a trade right, you should still do a self-check and say, should I have been trading in those market conditions, right? And these are not the conditions to trade in. All right. Now this move here, once we cleared these lows out, and you can see how this old low, right, let's push it back up here, this old low is serving as resistance, and I want to say that maybe there's a fair value gap or something up here. Yeah, exactly, right. So this old low is acting as resistance. Right, here's a fair value gap that it's pushing into. It's taking out a short-term high. Okay. So once we clear all of this, then right away my attention goes to where are we? So we cleared. Hang on 1 second. Here. There's another. These are weekly lows, right? So I'm anticipating that price will push to these other weekly lows, right? So you got this level here, and I'm just anticipating that price will push to those levels. So actually, took a short here. So here's a true order block forming, but of course we had a heavy news release come out around this time, which actually took out this high. So I was able to get a piece of this, but I was anticipating that we run here. And then once I got stopped out, break even, I should kind of just allow my psychology to get to me. But we have short-term high. Here's that intermediate term high, right? So here's a perfect market structural analysis here. Remember, whenever a range is filled completely, here's the wick of that candle. Whenever a range, let me be sure of this. Okay, cool. Yeah, that's the wick. All right. Whenever a range such as this is filled completely, right? Remember, this becomes that intermediate term high, right? Why is that important? Because once we have that intermediate term high, we anticipate that this high is protected, especially if it takes out a short-term high to the left. Okay, so if we're anticipating the other short-term high to the right to form, which comes in the form of a failure swing, then we can be looking for shorts from within this, the array of this intermediate term high, right? And then we see, once you get this is traded through, okay, Now your eyes point back to, okay, what is in this range. Remember that price will always prioritize the fair value gaps, right? So we push, and notice how the bodies, right, never negate this premium side of the FEG. Okay, we can come from this one here, right? So all price is doing is giving you an optimal trade entry right at 10 a.m. Okay, pay attention to these times. So right at 10 a.m. you have an optimal trade entry here to be able to short, and then we finally attack this low. But right away you should see, this image here where there's a series of up close candles, right, taking out a short-term high. Literally looks the same as this 1 hour image up here, right? No difference. Series of up close candles taking out a short-term high, market structural shift, and then we're trading back to the FEG, right? Same idea, right? You should literally replicate this day in and day out. So shorts could have been taken here, which this looks like it would have been at least a 1 to 5 to some degree, and then the rest of the day we just kind of consolidate. So here's the market going to consolidation, expansion, reversal, retracement, reversal, right? So you should see that all through here. Then we have that Judas swing in the London session, okay? So we have the Judas swing in the London session, which this is pretty easy, and you should see right away. This looks exactly like the two buy entries. The two shorting opportunities from above. Same idea. So you could consider this the consolidation or the accumulation, manipulation, right? Then you have a range expansion, and then price distributes within this fair value gap here, okay? But anyways, here, market structural shift, and price comes back the first time to this fair value gap here. Notice the body's respecting that fair value gap. Optimal trade entry right here, 615. And then here's where you have that 9:30 equities market open, right? Beautiful. This is textbook. And then what are we taking out? We're taking out this sell side liquidity, okay? So notice, in order to go lower, we got to take out buy side. So buy side is swept here above the Asian range. And if you want to, see this in terms of a dealing range, right? You just say, you could even come here, or you could just say, here's my dealing range, right? We sweep sell side, buy side, and then now once the buy side liquidity pool is swept, price should come back and take out internal range liquidity, which is right here, right? So step 1, step 2, right? Step 3, and then step 4 is to target 2, and then whatever the the algorithmic extensions are behind price from there. So you can come here, and maybe by the day price will make it here, but you see 62, 27 would have been your ideal take TP, because 27, right? Remember, you'll always find something algorithmic in price that aligns, right? So that 27 extension literally aligns with the discounted portion of this fair value gap from this candle to this candle, right? And you can see this would be another optimal TP, okay? But yeah, what you should see is literally the same things. We're taking out, and this is optimal trade entry, 70% right at the equities market open. I'm not sure if there is anything on the lower time frame that could have prompted an easier entry. Maybe once this is taken, if you didn't see this first, here's literally the same thing. Once this series of candles is traded through, and then you have that fair value gap, don't be stingy with yourself, right? Because there's this is now seen as relatively equal highs, right, to the algorithm. And if this liquidity pool is not met, then of course price is going to reprice to that. We've just taken out sell side, right? Equal lows. Taking sell side, remember sell side will reprice to buy side. Looking here, this is low resistant liquidity run signature, right? So what I'm getting at is, once this candle is traded through, here's your series of down close candles, which creates the true ICTOB, we have a fair value gap, and then a very small one here. Once this candle trades close to this, just manually enter. It's no big deal, and your stop can go below this candle here. Okay. So you would target here and then here. Okay, that's 1, 2. I think looks like a 1 to 3, maybe a 1 to 4. Okay, so that was two very clean shorting opportunities this week on gold, and this one buying opportunity which took place today. Okay, and just understand that the whole premises behind this is that price, right? We had this consolidation, expansion, reversal, retracement, reversal, right? That's the price delivery cycle. But the whole premise behind this is that price, and this is typically what you will see on weeks where you have one-sided delivery, and I've spoken about this before. Since Monday we've been downtrending, right? So whenever price reaches, think about the open, high, low. We make the low, and then now we have to close, right? So think about if price is reaching, if we've been trending in one direction throughout the week, if price reaches a higher time frame P area, which in this case is a weekly low and a weekly fair value gap. Let's see, is this April? Okay, it's just a weekly low. So we've tapped into a fair value gap and an old low, which we understand by now is very highly probable in terms of causing price to reprice in the opposite direction. Once we get that, and then you should see the fractal form, right? This is why I say understanding how the dealing range manifests itself, that is literally you playing a part in the fractal creating, right? Boom, 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 right? You'll see the same scenario on oil, right? So that's that. Let's go and play back oil. Now, oil had one of the better scenarios earlier, not early in the week, maybe midweek. And, we all understand. So if I play price back here, right here, okay. Whenever we get this scenario, right, where we're repricing from, and do we make it up to the fair value gap? Not quite. All right, but whenever we get this scenario where price is taking out an old, I don't know if this is a week, so this is actually an old weekly low. So this is literally the same scenario that we just saw on gold, right? We're taking out a weekly fair value gap, a weekly low, which is also causing price to deliver inside a fair value gap, right? So from that, you should expect price to, reprice to some degree, okay? So the week begins here, and what I was seeing was this dealing range, this here and here. So you sweep of the high, sweep of the low, and then now we're just coming in to attack internal range liquidity. Now I did think that price would reprice up here because there's a 4-hour fair value gap in here, and then here's a breaker right here. But you can't be so sure as to where exactly price will reprice to. As long as it comes to at least equilibrium of the range, right? Then you should be prepared to. You should be prepared for price to, once it's taken that internal range liquidity, and of course the next part of that phase is to go back and attack external, right? Which now I'm kind of anticipating that we attack this low by some point next week. And let's take a look at the weekly, right? All right, so the weekly has been in a mode of taking out previous week's lows, but of course I don't think this week. Okay, so this week we traded inside the range. So then at that point you guys should understand what I'm anticipating for next week, which should be take this out and then come and take this out. But who knows, maybe we get it, maybe we don't. But what's important here is what I'm trying to show you guys is here, once price trades into this FVG, okay, in a lower time frame, we should be able to find basically find buy entries. Okay. Now, the shorting opportunities come from us taking out this previous day's high, right? And we should all understand at this point, the previous day's high, right? If you think about Newton's laws of physics, right? That should be a big enough force to allow price to reprice in another direction. Okay. And then here's that true ICTOB, right? Series of up close candles here. And then you can see price literally trades right here. Okay. Price delivery cycle, consolidation, expansion, reversal, retracement, reversal, right? All day long. All right. So you could have shorted from this area here, which was an optimal trade entry. Here's also, breaker if you would have wanted to use that. And let's see if there's anything on the lower time frame, which there is. Okay. So once price takes out this short-term high, kind of give us the idea of equal highs. We run the short-term high. I'm just trying to show a clear picture of a series of candles. It's kind of what I like to look for. It won't always be perfect. But anyways, once you should understand you're in a downtrend market. You've taken out a short-term high, right? Buy side liquidity will cause price to reprice the sell side. So here's sell side, right? This would be the external. So we push external, and from here that is external. So in relation to this low and that these highs up here, anything inside of this range is internal. So we take out that high. We have a market structural shift, okay? And then price just barely trades into this FEG, right? So this would have been shorting opportunity here. And I'm going to show you how we cut through candles to kind of look at what I like to consider a reclaimed fair value gap. So this area here, any given day, we see this area as an order block, right? You see how price responds to this area, okay? Now within this area, and I'm just going to take the entire range of the fair value gap, right? So once price negates this area, right, and then we even get a fair value gap inside of it from the opposite direction, and then we negate it again, right? These are just kind of sort of the algorithmic things you guys have to pay attention to, because when you get other confluences back inside of this area, okay, that should prompt you, and look how many times price kind of responds to this same area. That should somewhat prompt you to, or aid in your entry selection, right? So you could have shorted from here, and then you'd ultimately be attacking this low, because this is the low that marks where that daily fair value gap is, okay? And then I'll show you this same example here again on the 30-minute chart, right? Me and yeah. So once again, here's the same scenario. So at this point, we haven't made it to this low, right? Any given day, we'd see this area as a true ICTOB. On the 15-minute, you'll see that series of down close candles, up move, fair value gap inside, right? So I'm just going to take this whole area as the fair value gap, right? You can see price literally responds to this area only to come back up here to the internal range of liquidity that we just marked, and then we reprice lower, right? Coming to this FEG, and then here's the optimal trade entry, right? So we fill in this fair value gap. So once this fair value gap is filled in, we should see a failure swing, which I see it right here, right? Remember, short-term high, intermediate term high, and then that's another short-term high right here, right? All of this is happening inside of where this old fair value gap used to be on the 30-minute time frame, right? Once price negates that PD array, you'll see that algorithmically that same area will be used, right, if the overall context is aligned, right? And then here we even have a small little breaker that basically prints inside of this same area, right, showing a market structural shift in price. Okay, so here's where the range is filled completely, and then let's look on a smaller time frame to see if we get that fair value, that fairy swing. Okay, because we take out the short-term high, price pushes up, pushes down, tries to push up one more time, and then we actually get the fairy swing as soon as this low is traded through. Okay, so up, down, up. This would be the low that gets traded through. You see the order block forms to push us through that level. Okay, this area here would be seen as a true OB. So once traded through, we can see it as a breaker. Fair value gap inside. So you can see this area as a breaker, right? Because it used to be a true order block. Price traded through it, and then you see what happens once price gets inside of this area. And then after this overall market structural shift, right, here are more fair value gaps that are printed in price. Okay. So from here to here, and of course that's going to be, ICT terms this consequent encroachment, which just means the 50% portion of the fair value gap, right? So yeah, you see that. There's another fractal that forms, right? So you have short-term high, intermediate, short-term here, and even here short-term buy side taken, intermediate, and then the other short-term forms, all right? And then we see the shift away, right? Attacking this daily, where this daily fair value gap was. So multiple opportunities to get in here. We actually got in here, okay? And just to show you more of what I'm talking about, right? Originally, we see this area as a true order block. It has the fair value gap inside. At one point in time, they actually respected that FVG, and once price trades through, right? If other things are aligned, you'll see that price literally respects this fair value gap. It treats it as support and resistance, right? And then this is nothing but an optimal trade entry. Right, we push past equilibrium to premium prices, and then we actually shift lower. Let's do one thing, okay, because we're going to look at buys in a second. But what I just want to see how algorithmic price is in terms of pushing to our extensions, right? Look at that, 27 extension. So this is textbook. This is beautiful. Right, just trust what I'm showing you guys. All right, pushing from here. Let's clear some of this off the chart. All right. Okay, so we take out this low, right? Which remember, this is that weekly FVG, right? We take, and you guys should be seeing how common it is for price to respond in this manner once a low and an FVG is taken out simultaneously. Okay, now once that happens, here's your series of down closed candles, right? It has a fair value gap inside, right? So that is that. Then you go. Actually, you guys, you should see it at this point. So let's just mark the high. Here's the FEG. All right. Look to the left. Short-term low. Boom, boom, boom. Let's play it out. New day, Asian range, tap into the FEG, right? Short-term low hovers above the FEG, boom, intermediate term low, okay? Right, we completely fill this range, right? And then right away, what you should see is this FEG, right? Series of down closed candles, all right? And I'm gonna show you really quick dealing range, right? So if you take this low to this high, right? Here you go. Mark it out in red. So remember, right? When we're talking about dealing ranges, of course, we have to keep in mind the overall context behind price delivery. Okay, all right. So price comes in, engineers this low, does not tap into this FEG just yet, and then we tap it, and then we see price get away. Okay. So this was literally sell side, buy side. Okay, we come to internal range liquidity, right? And then we reprice away, right? So price is just coming to internal and then external. So then you should see how this entire fractal forms, right? So boom and then boom, right? So now let's take that away. Look at this fractal: short term, intermediate term, short term, right? Now, why do I expect a short-term low to form from this? Because we've completely filled in this fair value gap. So now what I'm doing is my thought process goes to, well, what signature and price would help a short-term low form here? And the fact that we have a true ICT order block that sweeps this low inside, and we're in the mode of attacking internal range liquidity, and then here's that fair value gap. Notice the bodies never negate that fair value gap. Okay, we also had equal highs here as target 1, target 2, and then equal highs here would be your final target. Yeah, that's that. Then you can see, in terms of dealing ranges, same idea forms again, right? Look at this. This would be, the initial range high, and this would be the initial range low. Okay, you can see how price finds support at where the initial range low once was, and then finds support at where the initial range high once was also. Okay, this stuff is not just it doesn't just sound good, right? This is actually algorithmic. You literally see it every single day in price. Okay, so we sweep the low, we sweep a high, and then now we're coming back inside to find internal range liquidity, right? Which was this low right here. We sweep that low, and then we begin the next repricing higher. Okay, short term, intermediate term, short term, right? And then again here, short term, intermediate, short term, and then we reprice higher. And then what's important is price gets below the true day opening price. The entry is below the true day opening price. Entries come right at 8 a.m., which is beautiful. And then price pushes up and it attacks that buy side liquidity pool. Okay. But like I said, I was expecting to see price push above all of this into maybe this liquidity void up here. But being that we've had a market structure shift, I'm not sure what price will do from here. Right, so we kind of have a low resistant liquidity in nature here. And I don't know if I would have taken this entry right here, because I was honestly I was anticipating to see if price would take out this low and then possibly reprice higher. But honestly, once we begin to see fractals taken out, right, we have an intermediate low taken. This whole fractal is basically negated. What that says is that the algorithm is willing to continue to reprice lower, right? And then we've also taken this short term, intermediate, short term. So, we've taken all of that out, and up here we have a short term, intermediate, and then this would be the short term high. Okay, so I would think that price is probably want to go and seek to take out these lows, right? We have a low resistant liquidity signature here. We've taken out this area here, so in today's price action, just this is not necessarily what we want to be involved in. I do think that price will get inside of here next week, but we'll see. S&P 500. Actually, let's look at 100. So same idea on S&P, which I think is as simple as, price literally just repriced to, the opening of this true IC2 order block. Series of up close candles, down move, fair value gap inside, and all price did was reprice to here before the CPI news release. So here's Monday. Monday actually gave us an entry. Okay, so weekend opening gap. We fill in that gap. We trade down and then back through it. All right, here's a short-term low. Okay, fair value gap. We trade into that fair value gap. Now this would have been more of a risk entry, but it wouldn't have been bad because we have a market structural shift, and this is just optimal trade entry. Okay, if you measure from here to here, right, 62% is right where that fair value gap is, right? But now what I'm looking for is this here, series of down close candles, market structural shift, right? Price engineers liquidity, right? And then how many times have we saw where price literally comes, we approach the PM session, okay, 11, then we get to lunch, right? And then we take out, lunch seeks to either set up for the PM session to take out a low, or lunch actually takes out that low. So we see lunchtime take out that AM session low, tapping into the fair value gap here. And here's where my entries come from on the NAS 100 on Monday. And then I was attacking this high, and of course, didn't really know where we'd come to inside of this range. The only best thing you could do here is to use our fibs. And so we met the 27. You can see how price responds, and then 62, right? All right, and then we get CPI, which I'm not a big fan of. Moving here, so we kind of engineer equal lows, so it's pretty obvious that price will want to come lower. Then on what is this? Yeah, so nothing on this day. I wouldn't even stress this particular day. What you see here is a true OB. So look at what happens, right? Once this order flow here is negated, right? Because this area actually sweeps out. Actually creates equal lows, but still it sweeps out this low, and then we see it reprice. It displaces higher, it takes out a market, it provides a market structural shift. And then we can see that price is responding, right? But the elephant in the room says that it wants to be bearish, okay? So this whole area is a breaker, and then you literally get another breaker form inside of this breaker, okay? And so once price displaces away, okay, maybe we didn't catch this move here, right? Okay, where's that 930 opening price? Is here, okay? 930 open is here, and then look where entries come from, just above 930 open. Of course, this candle here, which a lot of traders, uninformed traders, will trade from, we're seeing this as a buy side liquidity pool that rests below the more important PDA rate, which is the fair value gap, okay? And this is nothing but an optimal trade entry also, right to 62%, right inside the breaker, and then there's a more fractal breaker here, right? Short term high, intermediate term high, and then this forms the other short term high, right? And then we push lower, and then this was an old low. I want to say it's a weekly low, or maybe it's a daily low. Okay, cool. Old weekly low that was being attacked, right? It's 4-hour FVG. Yeah. Okay, so also, actually no, not yet, because we haven't repriced to that area yet, so never mind. But anyways, right, so you see optimal trade entries from here, and then what I noticed about PM sessions is that 1:30 is kind of like that optimal time to enter in that PM session. Okay, and then we push lower. You see another breaker forms, right? By now, you guys, even just through this video, you should be understanding, the significance behind the breaker, right? It's just where that true order block formed with fair value gaps inside, and then when price negates that PD array, we anticipate that area will be treated as support and resistance, right? And then you can see how the fair value gap, if we reclaim the fair value gap, look how you get another fair value gap just in the opposite direction, and then price pushes right to it, which is also, let's go ahead and call it the mean threshold of this breaker. Bingo. Algorithmic. Okay. Yeah, and then we reprice lower, and then today was just more of just bullshit price, right? If this week was a tough week for any of us, which I'll be honest, for myself it was. I was way more conservative, because of understanding that this here will kind of throw the algorithm in shambles, especially if it doesn't show a willingness to come and fill in this liquidity void, right? We just kind of kept going into days of consolidation. There was no real narratives created around price. Okay, moving to the euro, which the euro did provide a failure swing after taking these equal lows today. Price is inside of a fair value gap, so this whole area was a fair value gap that it was operating inside of. But what was actually honestly beautiful about the euro, okay, remember from this repricing last week, we were anticipating that we make it up inside of this fair value gap. Well, we filled this FVG completely, right? And then you guys should understand, once again, if there's a short-term low to the left and we fill the FVG completely, what do we anticipate? A failure swing. Okay, this is how we view market structure. And in terms of news, right? So we have CPI release coming out. All right. Now here's where we begin to gauge news. Okay. If you look at price about 30 minutes before news, okay, and there's a PD array that price is hovering below, or if there's a significant PD array, and of course the narrative has to be right. In this case, the narrative is we've completely filled a fair value gap. We've taken buy side liquidity from here, from these areas here. We've taken buy side liquidity. Here's another previous day's high. So we've taken all of that, and now we're just looking for the signature in price. Okay. Well, this was the day that we filled the FVG. Now we anticipate the other short-term low, which is here. So now, if price is here, and I have done my advanced algorithmic market structural analysis, then I have to say, what signature in price will help me see that the storyline manifests itself in terms of us getting a failure swing, right? And then you see this fair value gap here, right? What is this series of closed candles? True ICT order block, failure swing, and to put icing on the cake, price sleeps out buy side liquidity, right? So basically what I'm getting at is, if we were to look at price before this release, which I don't know if it came out at, okay, well, yeah, it had to come out at 8:30. Price had already met this PD array, okay? Price met this PD array, so we would anticipate that it would seek sell side liquidity. Now, had price hovered here, okay, and let's imagine 8:30 was on this candle, then we'd anticipate the 8:30 false move here, and then boom, and then we come down, right? So don't necessarily be afraid of news, like the release of the news, because we know enough about PD arrays and where the algorithm needs to push to. That is not going to change upon the news release. The only thing that's going to change is the amount of velocity and volatility that it takes price to get to that area. Now, what I don't like is when we have these types of pushes, then I kind of want to step away from price, especially if the next day comes into this consolidation. So I'm not going to go into finding entries in here, because I'm going to say we should completely, we should just cancel this day out, right? These are not the market conditions that we like to trade in. The market conditions that we like to trade in are this, right? Because of the narrative, right? Here, there's not really a narrative, okay? Price is literally hovering. So if we measure, this range from here to here, and ICT himself says this, it's hard to gauge price when price is just literally hovering around the equilibrium portion of a range, okay? So here's the old volume imbalance that price traded through. And then what I would have liked to see was price trade up to this fair value gap, this old volume imbalance, and maybe we see some type of price action to allow us to deliver lower from here, okay? Now today, what we got was, if you could have made it through all of this, which this is just nothing but bullshit, and they're just engineering liquidity, right? Low resistant in nature, okay? Even from here, we have equal lows, all right, and we have a fairy swing, sweep, up, down, fairy swing, and look, is this image not the same image that we see above with the fairy swing? Series of down close candles. Price fills in the FEG. Boom. Once the FEG is filled in here, we anticipate another failure swing, right? Short term, intermediate, short term. Okay. And then we reprice away. Okay. Entry could have been, another entry could have been taken here, right? You see this old high. Let's see if we can take the bodies. This old high is used as support. So when retail traders see support and resistance working, it's not because of what they think. It's because of what we know, right? This is literally just an old high that's literally printed around where a fair value gap entry prints also. So you could have taken loans from here, and honestly, your stop would need to be down here, because you can't gauge price that much and say it's not gonna run here. I mean, you could say, hey, here's a possible area that it may hold up at, and you can see how once it trades through, it comes back, retest that area, and pushes through. But ultimately, you would have been attacking these highs, this overall high here, and then this high right here. Okay, and then we could use the Fibonacci extension to see just how algorithmic price wants to be. That may be a full price swing, yeah. So all the way here, and then if we push here, it may be pinpoint. Boom. Right. Alright, cool. Okay, that's that. So once again, this move is literally just us understanding that price, just like the model that I give you all, price will move from sell side to buy side, and in the midst, it will look to find areas to rebalance. Okay. Pound USD. I don't believe there was, not for me. If anybody else found an entry, then fine. But there was just nothing that stood out to me on pound USD this week. The only thing was that once this area ran an old high, I took shorts. I took shorts from here, right? Because we swept that buy side liquidity pool. There was another high here. We were inside of a fair value gap here. This was the previous day's high. So I kind of came into this thinking, okay, cool, we'll reprice lower and we'll take out this low. Now, I was very sure that price would reprice back down here, even after I was hit break even. And this was that day I was telling you guys I was literally up 3% here, and just kind of got greedy, and should have taken it, but I can't say that I wouldn't, with the narrative behind price, understanding that we had to reprice lower because of this, all the liquidity voids, and then down below, I probably would still hang on to that trade on the a different day. But anyways, everything up here, I don't see anything that would have prompted us to enter from there. The only thing that I did see was this Wednesday, I believe. Yeah, Wednesday we push into this FEG, right? So here's that same scenario again, where you have FEG and a liquidity pool coupled together, right? That's probably the strongest indication that price will reprice to other areas. You see this here, sweep, reprice, price gets inside of, so here's the body of the breaker, which is also 50% of this FEG, right? But this is not the optimal trading time for us at this point. I want to say it's too late in the day. Yeah, it's already 6 p.m., right? We're in Asian session. Same ideas here. This entry here comes right at New York Open. I don't believe that. Let's see. Okay. So here's a true order block that forms. Optimal trade entry here above true day opening price. I'm just, this is not, I wouldn't necessarily want to be a part of any of this. It's just too cloudy. If anybody else were to get lucky, then good for them. But I don't like to see, this stuff. Price does push to this fair value gap, and then it reprices lower. And then I'm just marking out the breakers on the 30-minute chart, just showing you guys how price is reacting and responding to, these areas that used to be true order blocks. Okay, once we clear this area, price comes back, boom. And not a lot from today, right? Right at midnight, we immediately trade lower. So, yeah, so that's that was pretty much the week in a nutshell. I hope you guys found clarity in that. If you had a tough week, please don't feel bad. Continue to trust what we're doing. Hopefully this video kind of reminded you guys that what we look for is there every single day, right? We just have to be present. We have to keep our psychology intact. We have to continue to do our self-awareness checks, and ensure that we're not deviating, or that we're not being too anxious, right? Continue to journal, right? Every single loss that we take, right, we should journal it, right? And then we should also play the chart back, just as I did, and basically retrain the brain, to perform optimally in those conditions, right? Because the brain doesn't know, when you're back testing. Your consciousness knows, but your subconscious does not know that you're replaying this market, right? And so what you're doing is you're placing those impressions, and you're rewiring the brain to understand how to perform, and how to basically read and react to those optimal trading conditions, right? So let's keep pushing, let's keep studying, and we'll have a strong week next week.